Hello, my name is Paul Wallace. I'm the Africa editor at The Banker, and I'm here with Lamido Sanusi, Governor of the Central Bank of Nigeria. Governor, thank you very much for joining us. You announced earlier this year that you would step down once your term expires in June next year, I believe. There's been some speculation that you might step down before then, perhaps even before the end of the year. Can you say anything about whether that will be the case or whether you expect to see out your full term?
No, I think in keeping with forward guidance, I would announce if I'm stepping up before then, and I have not yet made that announcement. And if I were to take that decision, I would discuss it with the president first before making it public.
And a lot of people are interested in what you'll do once you leave the CBN. Can you say anything about that yet?
Well, the first thing, obviously, is every central bank governor who leaves office, first of all, steps away from the stage and leaves the stage for the new governor to settle down. So you're not going to see me probably in any kind of public role or public discourse for a while. Ultimately, it's my favorite pastime is being a public intellectual. So I do expect that I'll be involved at some level, either as a think tank level or at a public discourse level or lecture circuit level or research level in public policy, especially around matters of development. But my immediate step would be to try to keep away from the public limelight as much as possible for a while.
Moving on to monetary policy, inflation in Nigeria is now seemingly firmly in single digits, but there's the worry of perhaps of tapering taking place in the US soon. Is a slowdown in quantitative easing something that's playing a big role in the MPC, the Monetary Policy Committee of Nigeria, keeping rates, interest rates where they are? Is that something that sort of looms large over the decisions that the MPC takes?
I think look, the United States is 25% of world GDP, and there is no way any economy in the world is going to be totally insulated from what happens in the US. But we've seen a number of results from the announcement of tapering that give us an indication of where things will go. It's very clear to me that the impact on emerging markets will be far more severe than impact on frontier markets, and the impact on countries with current account deficits will be higher than that on countries with current account surplus. We, for example, did not see much in terms of a reversal of flows after the announcement. We did see a slowdown in new money coming in, which then came back after the Fed announced that the tapering had been suspended. And we're able to, because of that and because of tighter monetary policy and judicious use of reserves, restrict the depreciation in our currency to no more than 2 to 2.3% compared to the massive devaluations we saw in India or Indonesia and South Africa and Ghana, anything between 12 and 20% across, and Brazil. So we do obviously in looking at the inflationary expectations and forecasts, factor in our forecast for exchange rate movements and all the variables that affect it. These are anything from the QE stance of the Fed to the revenue profile of government, oil prices, leakages in the oil sector, the level of oil theft, the output of oil, and the greater risk to the currency, to my mind, comes from the output shocks in the oil sector, and less from any oil price shock where we don't see a major risk of oil price crashing. And we also don't see a risk of a hasty exit from QE, certainly not with Yellen.
One of the interesting things that the MPC made in its latest statement was about bureau de change in Nigeria and money laundering through them. Could you just explain briefly your concerns about money laundering through the BDCs and what you think's behind that, the going-ons there?
Well, there are investigations going on, and it's difficult to say exactly what what is behind the strong demand for BDCs. And on the face of it, looks like there are a number of issues. Some of them legitimate concerns, a number illegitimate. So, for example, you've got very small importers who simply find the documentation requirements for import with banks too onerous. Okay, so they would rather just buy cash, $100,000, $200,000, and get on a plane, and go to China and purchase, rather than start doing a letter of credit and going through the whole KYC and all that. So part of what we've done is to say, listen, for very small importers, given the relatively low risk that we have, we've eased the documentation requirements so they can actually use electronic transfers to their supplier and buy their goods. Now you've got a second set of importers who we cannot support, and these are the ones who use foreign exchange to import goods that are on a prohibited list, goods that the Ministry of Finance does not want imported into Nigeria. So they buy the dollars and they go and import them, and they don't have to obviously they can't show documents that they're importing a prohibited good or they're smuggling goods. So these are smugglers. So you've got to shut them off. Then you've got people who purchase dollars, literally walk out of the airport with dollars to go and set up bureau de change or black market businesses in the dollar in countries like Dubai or Saudi Arabia, and so on. And again, you've got to shut that off. And you've got a Nigerian elite, politicians, businessmen who just find it very convenient to purchase US dollars rather than either have an audit trail with money movements in Naira in their account or carry huge amounts of Naira because they can carry much more value in smaller packages. So there is a combination of things happening, but either way, however you look at it, if a bureau de change purchases dollars and cannot provide evidence that those dollars were used for the importation of goods and services, it's one form of money laundering or the other. And so this is basically cracking down on it and making sure that it doesn't happen.
Governor, thanks very much for joining us today.